LP base and interest in the region?
Well, Gulf Capital raised a fund recently in 2009, actually, during a very, very tough time. We raised over $500 million, $533 million to be exact. And we're proud to say that actually our LP base was one of the most unique LP bases to invest in the region, because the majority of our LPs are international institutions from the US, Europe, and Asia, who came to the region, were looking for, let's say, the next frontier or the next growth hotspot. And they studied the region, they studied Gulf Capital and decided to back us. And so right now we have international institutions that comprise the majority of our fund. So it's been very, very exciting because it's a continuous learning curve for us as well.
And has their experience lived up to their expectations so far?
We've been very, very disciplined. They like that about us. They like the fact that we were very focused, because MENA has always been the buzzword. We came and we decided that we're going to focus on the GCC, the 6 countries, and the peripherals, anything within a 3-hour flight from our base in Abu Dhabi. So we focus on Egypt sometimes and Jordan, because we want to add post-acquisition value to our companies and help them and assist them, operationally, financially, and strategically. They like that focus. And at the end, they're coming to invest in an emerging manager, in an emerging market, in an emerging asset class. So they took the decision to back us up because of our focus. And I think we've met their expectations so far, and we hope to exceed them. We get a lot of feedback from them as well. We have a small number of LPs, we have around 20. So actually our interaction, it's a two-way relationship. And there's a lot of cross-pollination between our ideas, so we speak to them very, very frequently. We get their feedback, and they're more than happy to actually give us their feedback on a more direct and a more frequent basis as well.
Has their attitudes changed in terms of the risk perspective?
Yes, in general, unfortunately, when you have an investor from, let's say the Midwest in the United States, and they look at the Middle East, if something happens in Syria or Egypt, in some cases, the news allows them or creates the base for generalization. So being continuously in discussion with them and dialogue with them and showing them that everything is absolutely fine, or how you could possibly mitigate risks if you face them, is extremely important. They appreciate that, they understand that now, and it's a continuous education process that they appreciate. And at the same time, we learn a lot more of where to focus our attention in terms of risk based on their appetite.
Now, Muhannad, you're head of origination at Gulf Capital. What strategies do you employ to source quality deals and good target companies in the region?
Well, I want to start by saying that the quality of deals that has come into the market over the past 5-6 years has changed dramatically. I mean, the quality of deals has improved significantly. However, I want to also mention one point that's important. When it comes to Gulf Capital, every deal we have actually closed has been sourced on a proprietary basis and proactively. We develop very good relationships with intermediaries. We work very closely with intermediaries. It just happens that the deals that we've closed have been on a proprietary basis. We will continue to develop good relationships and a mutual dialogue with intermediaries to let them know proactively also what we're looking for. So we don't sit and wait to see, what deals they're going to bring us, erratically. We will come and feed them with exactly what our criteria are. The fact that we're looking for a majority ownership or influential minority, or we're looking at those geographies, those sectors. So we're seeing on all levels good deal, very, very good deal source on an improving basis. Plus, internally, we actually have sector expertise within our team. Everyone has a primary sector and a secondary focus. They develop the expertise over a year or two. They hire consultants, they develop experience and expertise, they bring in research, they analyze it, and then we have many sessions where we discuss, okay, within those sectors, what are the interesting subsectors and what are the leading companies within them. And we start reaching out to them to proactively create good deal flow. However, when it comes to proactive and proprietary deal sourcing, the only issue is the longer gestation of a deal. takes a lot longer to close, because at the end you're going to go to someone and you're going to go to a possible seller, no, to a possible business owner, and convince them to sell something they don't want to sell. So you have to explain to them why you are adding value in the short term, medium term, and long term.
And when it comes to sourcing targets for bolt-on acquisitions
Yes.
for your portfolio companies, does your strategy change?
It's a lot more focused and it's easier because you actually have now your experts in-house. Your experts are actually your portfolio company, and they will tell you, okay, well, we know of bolt-ons in this country or in that country or in this country or in this subsector which will be complementary to our business. So the expertise, especially on the commercial due diligence, is in-house. At the same time, you start dealing with lots of suppliers, a lot of people who know your industry, and they will tell you which bolt-ons actually might work to make this a much larger, more profitable and more efficient organization, which can grow very, very efficiently. So the focus is going to be a lot stronger, but and usually a lot faster too.
Muhannad, thank you very much.
My pleasure, thank you.